Hi, this is Andy Filipiuk in Toronto for the week of October the 28th. This past week, we saw both the Bank of Canada and the US Fed in action. In Canada, the Bank of Canada did not change interest rates, but they hinted that they could be moving in the not too distant future given what we're seeing globally. So as a result of the discussion, the Canadian dollar sold off about 2/3 of a cent against the US dollar, and the expectations are now that the Bank of Canada will in all likelihood be cutting with other central banks. The US Federal Reserve cut 1/4 point down to 1.5 to 1.75, interestingly leaving Canada as the highest bank rate in the industrialized world. Now, the Fed also hinted in the States that this might be it for them in cutting rates in the short term, and the expectations are that they won't go too much lower unless there's real economic problems happening. One important point, though, is that the Fed is now expanding their balance sheet in a very dynamic way, although, again, we're not calling it quantitative easing. So central banks will continue to print money as the global economy slows, and that's kind of being confirmed in all the data that we're seeing. So as we go into year end, look for more of the same, a weakening global economy, but central banks will be there to do the one thing that they know how to, which is print money to keep asset prices afloat. One note, our estate planning seminar has been bumped back to January the 9th of next year. Unfortunately, there was a scheduling error. So we've reserved all the people that have committed to December 11th. We'll be sending out a quick email. Again, we apologize for the problem, but unfortunately, we have to do it in the early 2020. Thanks for watching.